Are you a traveling nurse? Do you work with multiple employers? Well, in your case, we actually have a loan product for you. So normally when you have multiple employers, most banks look at it as self-employed income. And when they see that self-employed income, they don't want to lend on it because they see end periods. So you might have a month you're working at a hospice, another month you're working at a hospital, and your income is essentially dead to most banks. We treat it as variable income. We specialize working with nurses, traveling nurses, and we understand your income. We know how to break it down. So we'll use what you're actually earning to help you qualify for a loan. So give me a call, let's figure it out, let's break it all down, and let's get you a home today.
Good afternoon, good evening, good morning, as we always say. It's always a pleasure for you to check us out every time somebody checks out one of our shows, The Real Estate Experience with me, Travon Smith. Hey, I got a new guest today. I'm excited. Pick his brain, learn his information, but I'm always excited with this man right here, Mr. Armond Ohan, the giant lender himself. How you doing today?
Great, Travon. Doing great. Thanks for having me.
No, definitely a pleasure. I want to start. How tall are you anyway?
I'm 6'7".
6'7". That's a big guy right there.
Yeah.
Definitely a big guy right there. But I always like to start off. Go ahead and introduce yourself. Tell us a little bit about yourself. And I'm always interested in hearing the backstory. How'd you get into real estate lending? Because everybody has a different story.
Yeah, absolutely. So I've been in the business for over a decade. I got into banking just straight out of high school. Funny enough, I was actually a big tech guy, computer guy, worked at Geek Squad in high school. Funny enough.
Okay.
And my buddy, he got me into banking. So right before '08, he got me into mortgages, line of credits, and it was just a call center, making phone calls and whatnot. And did that for about a year until the market took a shift. So all the people we were calling now, we're calling them and doing collections. So it was a downhill kind of time for me where I didn't want to do collections. It wasn't me. I wanted to I love talking to people, but about positive things, right? Not to reach out and say, hey, you have a bill. So in 2008, kind of left that market, went into retail banking, did that for about a year or two, and I stumbled onto home loans, and I kind of got good at it. I was always doing the referrals, kicking it out to my loan officers, and I finally wanted to take the next step and just jump into it. And at the time, I was in my early 20s, living at home with family, and really didn't have much of an overhead. And I asked a couple people, and they said, well, you can go a few routes. You can either join a call center, you can join, a team, and you can join as an LOA, or you just start on your own. So I jumped right into it. I joined my first company, didn't really know what I was doing, stumbled about a year into it, and I kid you not, I went downhill, broke real quick. I was figuring out my ways, right? And this is 2011, 12, something like that at the time. And I finally, because at the time I was living in Pasadena, I finally stumbled onto the broker, which, funny enough, I worked with him for 10 years. And I learned he was one of the top loan officers in Pasadena. So I linked up with them. I kind of, coached him, said, look, I want to work with you, whatever it takes, let me just learn from you. And finally he agreed, brought me on board, just said, look, here's the business, here's how I do it, go get your business. So I started just doing the marketing techniques that he taught me, reaching out to different referral partners, CPAs, accountants, and attorneys and realtors, and kind of learned how to market myself, and started, attracting business. But now the pitfalls came where I have all this business coming in. I have no idea how to kind of structure it. So he sat me down and he's like, look, you're learning marketing, you know all this, but now you have to learn the lending side. So year one, remember, I didn't know what I was doing. Year two, I'm getting marketing. Year three, now I'm learning the business inside and out. So he forced me. He's like, look, you're taking an underwriting course. So he put me into an underwriting course, learned loans in and out. I started helping him with transactionally and kind of understanding the back end of it. So over the years, I've kind of have a wealth of knowledge. Fast forward 10 years, been doing a business. I know loans in and out. I talk to people all the time, and I've gotten so good at it. We're on the fly. I can do a pre-approval, asking you questions, knowing the guidelines, knowing how to structure deals. So I've kind of that's been my niche, just knowing products and being a mortgage guru, you could say. And using that along with my skills of just talking to people and being clear and concise, talking about guidelines and what's possible. It's just helped me with my business tremendously.
Man, that's why I always ask, because there's always so much information in the backstory. It sounds like even though you might have not liked the process in which you was going through, it got you ready for the moment you're in now, correct?
Yeah, absolutely. Absolutely.
Yeah, so talk to us a little bit about what's going on as a lender, what's going on in the market, because we've all not been trained, but I've purchased a house and people around me. Hey, anytime you get approved, it's a great time to buy a house, but it's hard to tell people this. So what's going on in the market? Because people are the housing houses are down, but the rates are not as where they would like them to be. I'm like, it's the perfect time because you have lease offers.
Right.
So
Yeah. Yeah.
talk to us a little bit about the market and where we're at.
Yeah. So my perspective, here's what's happening. We all know we're in an inflationary period. It's through the roof, and to combat that, what the Feds did were to increase interest rates. So in the past year, we were looking at interest rates of 2.875 about a year ago, and then starting in March, they started to tick up, and they were taking heavy precautionary measurements to make sure that the rates go up to be able to combat inflation. Well, now this past month, we finally reached the point where we hit the apex and it's trending downwards. So what that means is this past year, we started seeing rates in November of 8% and just really high expensive rates. And what happened was all these buyers wanting to buy a home, their payment went up by $1,500 a month. So for example, 3 years ago, what I consider a single family residence in LA worth about $1 million was priced at 1.6 with all the competition because the rates were so low, and it kind of pushed the price up high. Well, now that home that I'm using $1 million home as an example.
Gotcha.
That home went up to about 1.516. Well, it was okay because the rates were so low. But what happened in this past 6 months, the rates went up really high. Well, now people are just saying, I can't afford this $1.6 million home. I mean, the payment on it is probably $9,000-$10,000 a month. Not a lot of people can qualify, and people are comfortably paid $9,000-$10,000 a month. So there's been a huge kind of halt where all these buyers are just waiting, seeing what's happening next. And funny enough, this past week and a half, I guess people had an epiphany and realized, look, the world's not ending. It's 2023 and we're still alive. And, the New Year's passed and, the homes haven't been crashing. Yes, we are seeing a correction in certain areas. I call a correction, or I see corrections in outskirts. So to give you an example, I live in Glendale. I think you're in the valley, right? So we're in the hub of LA, right? Everyone wants to live in Glendale, Burbank, Topanga, the Valley, Burbank, all these areas. Well, these homes are very expensive and they're not budging yet. But when you go to the outskirts, such as like Glendora and out in San Bernardino, about a year ago, those homes were going above and 100,000 above asking, where now there's no competition, and now people are saying, well, the only reason I went out there was because it was affordable. Now why am I paying an extra 100,000 to live out there? Well, I don't want it. So home prices are coming down. So I've seen a 10% correction, seeing $150,000 price reduction on those homes out there. But in LA, people want to live here. It's the mecca of living. Where else are you going to live where you have the mountains, an hour away, you have the beach, you have LA, you have all these businesses. Everyone wants to live in LA. So I don't think there's going to be a huge reduction in price in this next year, unless something, an act of God comes in or something major comes in, a huge Fed announcement comes in. I don't think there's going to be a major correction. I think there's going to be a lot of homes that are kind of sitting on the market. What you will see is you won't see over asking priced homes. So you won't see a home going 200,000 over. You'll see a slight reduction. Maybe $1 million home might go for 980 because the seller just wants to sell it and get out. But you're not going to see that $100,000 or $200,000 price reduction, in my opinion. I could be wrong. I don't have a crystal ball. That's what I think.
I agree with you. I don't think it's going to budge that much. It'll budge a little bit, and that comes down to your realtor and in your business aspects.
Right.
I want to jump in, man. Like you said, you told me you knew your stuff, and I knew you knew your stuff because I watch your videos. I like the information that you give out freely, through your Instagram page at the Giant Lender, and things like that. I want to talk to you about the programs because I always see you talking about programs that you guys have. Talk to me a little bit about the programs that you guys have, and that are available to the everyday the realtors such as myself or clients. Right.
So I want to touch on two things. One is buying a home in Los Angeles, and one is how to buy a home in LA with a cost-effective way. So look, we know interest rates are high, right? There's a few programs that help you get a temporary rate reduction on your interest rate. So for example, let's say my conventional rate today on $1 million home is 6.5%. Well, what you could do is, if that home's been sitting on the market, you can ask the seller to give you a rebate of a certain amount of cash. Let's say, again, this is an estimate of $15,000. And what happens is that $15,000 gets injected into your interest rate. So for the first year, instead of being 6.5%, it's 3.5%. And then year 2, it's 4.5%. Year 3, it's 5.5%, and then finally year 3, it's 6.5%.
Is that similar to is that similar to the 2-1 buy down, or?
That is the 2-1 buy down. It's 3-2-1. So it could go up to 3 years, and it's a buy down program. So now someone that is, wants to kind of hedge the market and say, well, we know the rates are coming down in next year. I want to buy a house now. Yes, I can afford the higher payments, but I want a more comfortable payment. I want to be able to pay a payment where I'm saving an extra $1,000 a month. They'll take advantage of this buy down program, get into the home, and then refinance in a year or 2 later once the market is kind of swung around, and they don't lose that credit. So whatever's left over just gets applied to their principal balance. So that's one way. Another way is where they utilize ARM programs. So those are kind of the popular programs right now with helping get people into homes. It's lower interest rate, temporary rates, adjustable rates. Kind of, you don't want to lock in a 30-year. Why are you going to lock in a 30-year fix in the highest interest rate market that we've had in the past few years? It just doesn't make sense, because use these programs to get into a lower interest rate, get into the home, and then refinance a year or 2 later. But here's what's great is because there's no competition. Right now, you could go write an offer on the home, and you probably have 2 or 3 people writing an offer at the same time. You're not going to have 40, 50 people that are writing an offer on it like they were last year. So this way, you kind of beat out the competition. You're able to come in and say, well, I can float this extra $1,000 payment. Let me bump up my offer and get it accepted. Get into a home now, build your asset, and live in this home. And I'm going off topic, but earlier you mentioned, like, is it a good time to buy? Should I buy? I hear this all the time. And at the end of the day, if you're paying for rent, you're paying all interest. You're not taking advantage of the interest deduction. You could deduct a loan of $750,000 a year per married couple in interest. So again, I'm not an accountant. Don't quote me on this, but this is what you could see if you go online. Someone buying a $1 million home, they could write off about $4,000 in interest a month. That's huge. That's $4,000 in interest a month. So if your mortgage payment's $8,000 a month, that's like renting a $3,000 or $4,000 house. Of course, it varies. A lot of details come into play, but that's one of the big reasons you should buy a home. Now, here's who should not buy a home. So if you want to buy a home and you're saying, well, I don't know what's going to happen to the market. Well, if you tell me, look, these payments are hard, I could barely afford them, you shouldn't buy a home. Or if your rent is very low and you want to just wait it out, consider just keep paying that $1,000 or $1,200 rent and save up a little more cash. And then let's have another conversation in a few months and see where the market goes. Or if you tell me, look, I just want a house for a year, I'm going to sell it and go buy another house. We don't know what's going to happen in a year.
Exactly.
Keep the home. But if you're going to live in this home for 5, 10 years, I don't care what happens. Let's just say an act of God comes in and knocks 25% off your purchase price. You're buying $1 million home. It drops to $750,000. You're living in there for 10 years. In 5 years, that home's going to be worth over $1 million. It's going to be worth way more than you pay for it. Buy the home. Just get into it. Don't wait, because you're going to build that appreciation. You're going to pay down that mortgage instead of paying for rent. So those are the people that should buy a home and not buy a home.
Okay.
Now, in LA, homes are expensive. Who's buying these homes? It's sad to say, in Los Angeles, a lot of homes are $1 million plus, unless you're looking at condominiums. Most buyers, most of my clientele are all self-employed, because to be able to buy a home in LA, you need to be making about $150,000 to $200,000 at least to break into $1 million home. And $1 million home is entry level. So all these people are all self-employed, and the challenge they're having is they make a ton of money, but after their marketing expense, vehicle, all these budget expenses, they're netting very little income. Well, that's on their taxes. Well, we have certain programs to understand your income in a different perspective. So one of the most popular programs is a bank statement program.
Bank statement.
Right. Now, remember, there's 3 metrics to qualifying for a home. There's credit, there's down payment, and there's what's called debt to income ratio. So essentially, your budget for a home loan is about 50% of your monthly income. So if I'm making $10,000 a month, my budget for a home loan is $5,000 a month, minus credit expenses. Let's say I have a $1,000 car payment, $500 student loan. You just subtract that, your budget's $3,500 a month. So with this bank statement program, it doesn't look at your net income. What it does is it looks at your bank statements. So let's just say, you own a tile business, granite business, and you're clearing $40,000, $50,000 a month. So we look at that and we're saying, okay, well, here's all his deposits, $40,000, $50,000 a month. He has some cost of goods. His net income is around $20,000 a month. That $20,000 a month income assuming you have very little debt, some credit cards, maybe a car payment, that'll get you into about a $1.5 million home, assuming you have the cash for it. Now, how much cash do you need to buy this home? A self-employed buyer without tax returns with this bank statement program can buy a home with as little as 10% down for up to $2 million. That's huge.
That's huge.
Are you kidding me? That's huge. So that's one of the programs. And then, of course, we could go all the way down to just not even showing any docs. We're just, as long as you have good credit, as long as you have a down payment of 20%, financing is available. We don't look at income.
Hey, if you're just tuning in, it's the Real Estate Experience with my man, the Giant Lender on Instagram, Mr. Armond Ohan. You know, like, man, you dropped a whole bunch on there. Like you told me, you was like, I got stuff to talk about. I just sat back and listened because I'm absorbing all this and how I can use a couple of your programs. Go ahead and give everybody your information.
Yeah, so the Giant Lender, 6667, depending on the shoes I wear on a given day, came up with it. It's a fun name, fun spin on it. The Giant Lender. Find me on Instagram. I talk about all the loan programs, what to look out for. Again, I've done a lot of transactions, so I've learned all the ways of preventing issues with escrow. So I'll give you a perfect example. I know we're kind of going all over the place, but here's a popular one, right? You buy a house, you get into escrow. There's a short contingency period. Let's say it's a 10 days for appraisal, 10 days for approval. That's a slam dunk for us. We're quick at it. But let's say you're in a situation where the appraiser goes out to the property. Well, the appraiser does a safety check. They want to make sure that the home is clean and habitable. What makes it clean and habitable? The electric outlets have to be in place. The windows don't have to be broken. But here's where a lot of the water heater in California, you have to make sure that it's double strapped. So there's a strap going from the top and bottom. There has to be a smoke detector in each room. There has to be a CO2 detector in the main common areas. Well, sometimes it just goes over the agent's head and they forget about it. Appraiser comes out and it's like, oh, well, you forgot this. Well, that appraiser is he's already there. He's generating that report. He's completing it, sending it to everybody. And then once that report comes out, it's going to come back as faulty. It's missing information. You need to have the appraiser go back out and show that all that stuff is done. That could delay you by a week or two. So if you follow my page, I kind of go over this kind of stuff, what to look out for. You know, does your pool have water? If it's missing water, I can't finance it. We have to put water in there before we can finance it. So let's get it plastered up. Let's make sure it meets the safety and requirements. And if you need to fill it up and you only have 24 hours to fill it up, we have contacts. The semi could come in and fill it up with water in 2 hours. So there's always a way to get it done, as long as it meets the safety and meets the guidelines of Fannie Mae and Freddie Mac.
Hey, like I said, man, the Real Estate Experience right here with the Giant Lender. I'm not sure if you want to give people a website or a phone number, or you know what? I'll get the information, whatever you want to give to me. I'll put it in. Go ahead and give it to them if you want.
Yeah, the Giant Lender. Find me on the website, getmeprepproved.com. My cell phone number is 626-823-8278. Reach out to me. I'd be happy to go over any kind of scenario.
I'll make sure I put all that information in the description. Man, I want to thank you for hanging out with us. You already know from this conversation that I got to talk to you at least once a month or every other month when you get some time. I appreciate Mr. Armond. I appreciate you. I'll definitely get your information out to the realtors I know and tell them I got a new lender that, you know, they need to at least text and introduce themselves. But I appreciate you once again. And it's a wealth of knowledge. I don't think everybody understood everything. I'm excited. It was a crash course. All the information was good information. So people need to go back and watch this show over and over to understand the amount of knowledge that you dropped in here. But we appreciate you, and I can't wait to talk to you again.
Thank you, Travon. Thanks for having me.
Have a good one, man.
Take care.